The miracle of compounding returns is overwhelmed by the tyranny of compounding costs. I could almost hear the words rising from the final resting place of John Bogle, the founder of Vanguard, who's the pioneer of index investing. And he really changed the world of investments when the news broke a couple of weeks ago that 10x has agreed to buy CoreShares to create a 31 billion rand full-service indexing business. Now, it's a major consolidation in South Africa's index tracking market. As we know, 10x, which was recently acquired by Old Mutual Private Equity, announced that it's going to purchase 100% of CoreShares, another index fund powerhouse. And that counts RMI, Outrance, and Gridrond as founding shareholders. The combined business is going to have 31 billion rand in assets under management. And I'm joined now by Tobie van Heerden, who's the CEO of 10x Investments. And Tobie, I'm sure you're very busy, and I hope that the CoreShare deal is set to go through any day now. It's obviously very good news. Can just give us a brief update on the deal and the expected culture change between the two groups.
Thanks, Michael. It's been an extremely busy time for us, but it's also an exciting time for us as a business. We're just waiting on regulatory approval. From what we hear, it should be any day now. So any day, hopefully in the next couple of days. So let's fingers crossed. From a cultural point of view, it's amazing how aligned we were when we sat with the CoreShares management team and the business there, and we're looking at our culture, our values, and we plug it next to each other. It was amazing to see the sort of the similarities between the two. I think the biggest sort of difference was, CoreShares really playing into the intermediary space, where 10x previously hasn't played in there. We were D2C business, umbrella fund, corporate business, and we haven't embraced the intermediaries yet. And strategically, as you and I spoke previously, that's a core focus for us. We need to be able to service the intermediary market, and we want to make friends with them again. And this was a fantastic place for us to do it because CoreShares has got such a great brand out there with the intermediary market.
It's such a good point you make because ultimately investments are sold through relationships via those intermediaries. They are hardly ever bought. Yes, we're seeing rising interest by retail investors because of tech platforms, but still that is the bulk of your route to market. And also unsurprising to hear that the cultures align, because I know Gareth Tobie quite well. He's really, really passionate about democratizing investment, bringing down fees and lowering costs, and that's a big part of the 10x philosophy as well. Now, it's interesting if you look at this whole debate, isn't it? Of active versus passive at the moment, because we've got the likes of Elon Musk, who's calling for a shift back to active investing. And the last time we spoke, you mentioned that South Africa's passive industry is still far from reaching its potential. Does that still hold?
But Michael, for me, it's not the active versus the passive debate. For me, is at a high level. I don't think it's either or. I think philosophically, we say as a business and at 10x is we're going to do index investing very, very well. We want to do it very effectively, and we want to give the market access to beta at a very good rack rate so that they can get access to beta. So beta replication must be part of your core investment strategy, and then you can add alpha to it. So that's where alpha comes in. So it's a combination of the two. However, what we do profess is that there's a big segment of our market that can't pay up and have the sophistication or the complexity to go up the curve in terms of active management and where it issued. So we need to provide a very cost-effective solution that can, through the period of time, can provide very good returns for investors after fees. And that's where we philosophically say, that's probably 80% of our market if you look at it. A large chunk of the retail market out there, we give them access to that product. And then for the rest, as you go up the sophistication curve, that's when you add active public-private market play, listed or unlisted debt, international exposure, all of those sort of things that get added up as you go up the curve.
And this all feeds in. You've said you want to become a full service asset manager. You've set very aggressive targets on that front. Can you just elaborate on what you see that kind of full service asset manager looking like?
Yes. So again, philosophically, very much aligned. We're going to do index investing and passive investing or rule-based investing. We're going to do that very, very well. And that's our core focus. So we're not going to do active management. We're not going to do a multi-manager. We're not going to do all of those sort of other things. We're going to be very focused on that. When we talk about full service offering, what do we talk? We want to service all the various distribution channels that there could be. So that's the direct consumer, the intermediary space, and the institutional market. So providing them all through those channels a solution. And in order to provide a solutions to all through those channels, you have to have a range of products that's differentiated for each of those channels. So some are very similar sometimes, but then there's also something different. So for instance, having the ETF business, which is part of the CoreShares business that we're getting. So we're getting that machine, and we think there's a very big part of the sort of the market that's going to move to ETFs. And we can now service that market very, very, very well and actually create some scale there.
Yeah, and it's not just retail. In fact, the biggest part of that market is institutional as well. In terms of branding, how do you see the brand evolving? Is it ultimately all going to become a 10x branded full service asset manager?
Yes, that's definitely the plan. So whilst we're going through the integration process, we will retain the CoreShares brand. It'll be called CoreShares by 10x. And as we go, because at 10x we're also going through a bit of a rebranding. So hopefully in a couple of months we can show you our new logo. But it's fortunate it's all happening at the same time. So when we rebrand, we'll bring in the CoreShares brand behind us, and we'll be known as 10x.
Well, that's a fantastic point you make when you think about merging cultures. It's almost like both cultures are now going to be starting with a clean slate, with a fresh brand, and almost like a startup, just with the sum of all of those parts. It's much greater than the whole, considering what you've acquired in Gareth Tobie and his team. There's a lot of IP there.
Michael, you sort of hit the nail on the head here. You know, when we started having a discussion with Gareth, you know, I said to him, you know, I'm new to 10x. You know, for me, whether it's 10x or CoreShares, it doesn't really make a difference. I'm totally ambivalent to either, you know, whether it's staff, whether it's brand. We're going to do what's the best thing for the business. You know, so, and I think that really attracted Gareth to say, you know, this is a team I want to work with. This is a business I want to be part of. So we absolutely, there's a meritocracy in everything we do in the business, and you know, we're not going to push one agenda above the other because that's the way it was in the past. You know, it's a fresh management team. We're looking at it from a point of view where we want to create a platform to create a lot of scale. You know, so that's our core focus, is how do we build a platform that can create scale, that can take a lot of assets as this business grows. And you know, with that, if we look at resources, for instance, you know, we need to apply our resources, whether it's a 10x resource or a CoreShares resource, in the best way possible. Same goes for product, and same goes for administration, platform, all of those sort of things.
And it's great to have that alignment behind that vision. Those are the really important conversations to have when you sit down to do these kinds of deals. Now, broadly speaking, we're currently also a year undergoing change. The retirement industry is undergoing change and has been for some time, with the various retirement reforms, driven largely by Ismail Mamoniat, who's now been appointed acting DG in the Treasury. So he's certainly moving up. I wonder how close he's going to remain to this. But there's an important philosophical question here about the two-pot system and when it might happen, and whether or not it's a good or a bad thing in the long term. Ultimately, if you are allowing savers to access some portion of their retirement savings. What are your thoughts on the two-pot system?
So firstly, I think at least it's a bit of movement, because forced preservation, in my view, is absolutely critical. We've seen that the behavioral element in South Africa is that when you leave, you take your money, irrespective of that. You know, we've got the numbers. You know, 95% of people that when they leave their employer, they take their money, and the detriment that has to your end pot is absolutely insane. So the only way that you can solve this is through forced preservation. So that's the first point. So at least, you know, we have now legislation that says, okay, there's going to be forced preservation. The problem I have with the current way they're sort of going to structure it is that it's actually going to be 4 pots. It's not going to be 2 pots. You know, because there's a window period of 2 years, and then you have an A and a B pot. You have the previous, you know, pre-March 2021, then you have post-March 2024. So from an administration point of view, it complicates the hell out of it. You know, from an understanding point of view, it complicates the hell out of it. So it's creating a lot of complexity where it doesn't have to be there. So there's going to be some people that's going to be grumpy with this, you know, from a, you know, take your money or keep your money. So we've just got to look through that. So I think from a regulatory point of view, they could have made it much more simplified. And we haven't seen that at this point. So let's hope there's some sanity that does prevail.
Well, exactly. I think Momo was on record as saying we'll see something in July, and hopefully something a bit more streamlined and simplified, to your earlier point, because 4 or 5 pots. What are trustees going to have to do now? And trustee training is already a big issue in the industry. So really, what we need to do is something that's effective, fit for purpose, and to your point, not overly complicated. With that said, do you reckon South Africans are becoming more financially literate? Because certainly with the rise of social media, maybe it's because I'm a financial journalist and I follow FinTwit, but it looks like people talk about stocks, maybe it's meme stocks, but they look like they're engaging about investing a little bit more than, say, 10 years ago.
So I think you've raised an interesting point here. For me, there's a difference between trading and investment. Okay, so let's talk about stocks. You can talk about stocks, great stuff, but that's sort of a trading mentality. You're buying Sasol, selling Sasol. Is it a good buy? Is it a good sell? Whatever. That for me is a trading mentality. Where the education needs to happen is in the investments and the savings space. So sort of medium to longer term savings products, costs. That sort of rhetoric needs to come into the system. So I'm not seeing a lot of that. So yes, some of our competitor, and we certainly going into that space, but on the investment side. So if you look at the sort of the fintech competitor space, is really into that trading culture, which is a very different market to the investment side. And we haven't seen that. And that's where 10X is going to come in, and we're going to really push the needle on that side to help people and to create much more awareness around, the accumulation effect, compound interest, fees and costs, how you should look at that. Having a consistent strategy through the patch. It's not glitzy and glamorous stuff, because I'm not talking about, a 20% up in Sasol potentially down the track, but it's a much more important discussion than trying to buy a stock punt. So that's the tension that I think you're seeing at the moment.
So I think Pit van Heerden, that very well-known value manager, would certainly concur and agree with you. Like he's said about his investments, he wants them to lie down and mature for a bit, like his red wine that he loves in his cellar. And that's what investing is about, versus trading. It takes time. It's a little bit boring, but it should be. It should be sometimes like watching paint dry. But to educate people, you've got to make it exciting and interesting. So I think that's where the big challenge is.
So what we're going to try and do, and a lot of thinking and innovation which we're doing is about gamifying investments. And so how do you do that? Because you can see people have sort of started to gamify a bit of trading and stuff, because it's not difficult to gamify. But to gamify investments is to make it a bit more sexy, to make it a bit more. And that's the sort of a lot of work we're putting into the system at the moment to get that right.
Sounds like potentially you could have an app in development, a fintech that helps on gamify saving and investment journey.
Watch the space.
Tobie, I'm going to leave it there. Great pleasure. And that really excites me as someone whose daily journey is to also educate people about the difference between trading and investing, and how important it is to get that number, that 6% of people who save enough for retirement, much higher, because it's been 6% for as long as I can remember. It means 94% of South Africans are just not saving enough, or not getting to that point in their lives where they have enough to save. And I mean, it's just a national tragedy. Tobie van Heerden, Chief Executive of 10X, here on Business Talk.